inflation is transitory, which means it's not likely interest rates will rise too quickly. There will be plenty of questions for Fed Chair Jerome Powell. He takes the podium in just a few moments. Before he does take the podium, I want to bring in Milton Ezrati, chief economist at Vested. Milton, it's good to see you. I think the Fed did a good job of broadcasting this policy decision. Markets really not moving too much in the wake of this. What's your reaction?
I think the Fed is eager to broadcast its policy. I think there will be changes in this, but I don't think they're going to be very radical. I'd be shocked to see any comment on rates at all, except that they're going to stay here for the time being. And I'd be shocked to see if Chairman Powell, either in his remarks or certainly in the written commentary, commits to any date on rates, raising rates.
You know, it is interesting to me that the Fed did say that substantial further progress was met in beginning this taper. Now, he did say previously that we need to see more improvement on the jobs front of the labor market before those interest rates do rise. I think many would say we still have a long ways to go when it comes to this labor market. How does that factor in here?
Well, I think he's using the labor market. He doesn't want to commit to dates. Of course, the media loves to get the date, but he doesn't want to. So he's looking for some benchmark he can hang his hat on, or at least cling to say, I'll do it then. Of course, he's not defining what improvement in the labor market is. He has even said at times that he might have to move before we get back to pre-pandemic levels in the labor market. So he's really leaving the field wide open for himself.
You know, I do think that within these past 5 trading days, we have gotten some positive data on the economic front. Certainly the ADP private sector payroll numbers this morning for October showing 571,000 jobs added, more than expected, a move in the right direction, as well as that GDP report that we got from the third quarter. Now, yes, a bit muted at just 2%. That was disappointing. But inflation, the Fed's preferred gauge of inflation, those personal consumption expenditures ticking lower to about 4.5% from 6.1% in the second quarter. It does seem like there is economic data that the Fed chair can point to in just about 5 minutes that would show that inflation is transitory. Do you agree?
There is data he can point to. There's other data that contradicts that. So this is a tough pull for him. He said transitory for months now, and there are a lot of people in the market who are very skeptical of that. So he's going to have to make a much stronger case than he has to get away from the idea that he has an inflation problem to deal with. Yes, it has improved, but not enough.
So how should consumers make plans these holidays and even in the year ahead, Milton, knowing that inflation holistically over time might be transitory, but at least for the time being, these prices are still elevated?
Well, the inflation rate can be slowing, but the fact is the prices have gone up. They've gone up faster than wages. People are paying a lot for fuel. People are paying a lot for food. I know that these numbers are downplayed by the statisticians, and for good reason. They're volatile. But for the average American, they are not either something to easily dismiss. These are 2 huge parts of the average person's budget. And so they're very concerned. And the Fed, if they're going to conduct a decent PR campaign here, they're going to have to address that.
Yeah, I think that is worth noting. I've been looking at travel myself over these holidays, both for Thanksgiving and Christmas, even into next year, right around some of the federal holidays, President's Day, etc., Martin Luther King Day as well. Prices are through the roof, especially as these oil prices have risen. What does that mean for the economy and consumer spending?
Well, it means the consumers are going to spend it on food and oil, food and gasoline and heating oil and gas heating, especially as the temperature gets colder. They're going to spend it there instead of on toys and holidays and whatever else they might spend it on. That's what happens when these essential prices rise. People have to shift. So retail will suffer while the gas stations will be getting more dollars, not necessarily pumping any more gasoline, and similarly home heating and electricity bills.
So it is interesting, the 10-year Treasury yield, which does seem to be the preferred measure of inflation, at least for stock market investors down here Milton, ticking a little bit higher in the wake of this Fed decision. The 10-year Treasury yield now at 1.59%, but still below the nearly 1.7% that it had climbed to just a few weeks ago. And that 10-year Treasury yield does have a direct impact on the NASDAQ, right? The path forward for that particular index and those tech-heavy names. Where do you think we settle when it comes to bond yields by the end of the year?
Well, a lot depends on this inflation and how well Chairman Powell can make his case. He's clearly not going to raise rates until the taper is done, and they've talked about, or at least put out, that will probably not be till the middle of 2022. And he's going to use the unemployment situation. He's going to talk about inflation maybe a little above his target, and all these things. It's a question of how well he sells it. But if the bond market starts to worry about inflation, regardless of what he says, or he doesn't make a strong enough case to the bond market that this is transitory or under control, then it will move first. And bond investors will push up yields on treasuries and other bonds even before the Fed moves. This has happened before when people get concerned about inflation. Right now, I think the bond market is saying, well, we hope he's right. We'll take his word for it. But the longer the inflation persists and his transitory forecast doesn't come through, the more skittish the bond market will become, and they will move before he moves rates.
So my last question to you, Milton, as we await the Fed Chair Jerome Powell set to take the stage here for this press conference, including a question and answer portion, is the taper has been announced, slowly bringing down those monthly bond purchases, more than $100 billion collectively in bond purchases on a monthly basis. The slow pace outlined by the Fed, I think we're going to get some answers now. Milton, thanks so much for joining. Let's take a listen to Fed Chair Jerome Powell.
Congress has given us.